Howdy there, folks. Welcome into today's video. Tesla is the subject of today's video. First one up here, 4 videos for me to react to. First one, Tesla's dead money for the next few months, but I'm still bullish long term. Bryn Talkington will react to that one, give my opinions and perspectives. Tesla's earnings call was a train wreck, says Dan Ives. I saw this yesterday and I was like, I gotta react to this one because we might have a difference of opinion in regards to that. Then we'll get into this one. Mass EV adoption is a lot harder than early adoption. This one's from about an hour ago, former Ford CEO. So we'll listen to that one, react to that one. And last one up here is Cramer from last night. In one earnings call, Tesla removed itself from the Magnificent Seven, says Cramer. So looking forward to getting that one. Man, I never record a video this early in the morning. This is crazy. I mean, a lot of you guys will see this way later in the day, but like I never recorded. But I think, I woke up so early this morning. I even got to see the sunrise. I never get to see the sunrise, and I actually saw the sunrise this morning. And you know why? Because it's a big day. I think, like mentally, I was like, it's a big day. And the reason being is the Patreon portfolio hit $10,000 for the first time ever today. So big moment for the Patreon portfolio. If you want to join me in there, see the moves I'm making, including the stocks I bought here today and every week, then check out the pinned comment down there. You can join us in there. I also have a tier with my Become Master Stock Market course attached to it. But this tier, you get to see the moves plus be part of that Discord chat. So pinned comment if you want to join me on in there. Alrighty guys, let's get into this.
Missed on expectations around revenues and earnings. So of the 10 or 11% it's down, that's probably a third of the reason. To me, the 2/3 reason, the other 2/3, is that when it comes to guidance for 2024, that margins, we're not sure. So Elon was being honest, but the market doesn't want lack of clarity, and also volume growth. So I think the stock is down appropriately, being the lack of positive guidance, and they missed the reduced numbers to begin with. I think that as in like short term, the stock is in no man's land. You want to see that stock base out at 180. If it can't base that, you're going to be in the 160s. So, rule number one, do not buy a stock on a day like today. You have to see that flush out. As you know, I entered the stock around 120 and 150. I sold calls on some of those that got called away at a higher price. I'm just in the stock right now. I would look over the next couple of months. So I think it will be dead money over the next couple of months. Once things settle, I'm long-term bullish on the name. I think the manufacturing prowess is...
Okay, before she goes further here, is Tesla dead money? Should you have been buying Tesla yesterday or this morning or things like that? Okay, so first off, is Tesla dead money? The answer is Tesla's a different stock. People will always want to treat... This is where people make a lot of cardinal sins in regards to Tesla. Tesla's not the average stock in the market. There is a belief that, you could let stocks flush and, certain stocks will be dead money for a while, things like that. That's normal stocks. Tesla's not a normal stock. It never has been a normal stock. It never will be a normal stock. This stock, the sentiment can change in a snap of fingers, from extremely bearish to also extremely bullish, and that can happen in a few months. It doesn't take a year, 2 years, 3 years for the sentiment to shift in regards to Tesla. And I've seen it go from very, very bullish, people are very excited, to very, very bearish very quickly. And so this is a whole different stock. And so at the end of the day, when it comes to a stock like Tesla, you get great buy the dip opportunities. You got to take advantage of those as soon as you get them, because things could change so much in a matter of a few months, and you don't want to always be banking that the stock's going to stay down or it's going to go lower, things like that. Tesla's not your average stock. It's never been, it never will. Well, I don't say never will be, but it's not going to be anytime soon. Okay, it's a whole different situation. It's a cult stock. It's an crazy growth company. Obviously, over the years, maybe not 2024 might not be that sort of year, right? But look at the growth rates over the past 10 years. Think about where Tesla will be 10 years from now, right? I mean, there's a lot of people that think 10 years from now it's doing $1 trillion of revenue. $1 trillion of revenue. I mean, yeah, they did a little less than 100 billion. And who's to say they can't? They just scaled. 2013, this company did $2 billion in revenue. And this past year, 2023, they did nearly $100 billion of revenue. So who's to say they can't go from 100 billion to $1 trillion?
incredible. But right now, you really just can't touch this name because I think the sellers will continue and the price revisions are going to continue to come out the next couple of days.
Hey, Brandon, it's Josh. Good to see you. I wanted to ask you what percentage probability you would place on the idea that there's going to be some other vehicle through which Elon Musk expresses his next generation technology ideas away from Tesla. Maybe it's at Starlink, maybe it's at SpaceX generally, or maybe something we haven't thought of, like the Boring Company, that he files an LLC and they're off to the races. Is that like a big risk, and what percentage probability would you place on that risk?
I don't think it's a big percentage at all, because there are, like, full self-driving ultimately is where the AI technology is. And so he talked about on the call, no other automaker saying, hey, can we license your full self-driving? That is where all of the AI technology, that's where all the amazing engineers there. I think that is a low probability. To put some context, Josh, on your comment about what he said the other day about maybe I'm not going to be interested in doing AI or new projects here because I don't own enough of it. He was asked about that. And what he says is that, and I get it, but I mean, he sold the stock. He said, I don't want to have control. I want to have influence, because I don't want an activist shareholder who knows nothing about the name, except for it hasn't done well over X amount of time, coming in and exerting more control than he has. So I think over the next few months, the board's going to have to work something out, because Elon and Tesla are inextricably combined. You can't have one without the other, but I do not think he's going to take away from Tesla to just go innovate somewhere else, because it's too embedded in the FSD.
Yeah, and I think another component people got to factor in here, with this whole worry about like Elon's going to do AI at some other company, not Tesla. Huge factor I think just people are missing. Who builds AI? People. So let's think about this logically for a moment, right? Would you rather work at some random no-name company, or would you rather work for Tesla? Of course, like 99% of people say I'd much rather work for Tesla. Its brand name is you can say it to almost anybody. Say, oh, wow, you work on AI for Tesla? Like, that's a huge deal, versus some no-name company or the Boring Company or whatever. Like, no, okay. Like, at the end of the day, like, pride is a huge factor in regards to humans, and especially males specific. And so people want to work for Tesla. That's the bottom line with that. And so, people want to work for Elon, but they also want to work for Tesla. And to be known as somebody that works for not just Elon, but for Tesla, it's a big factor, okay? All right, guys, next one up here. Dan Ives saying it's a train wreck of a conference call.
In the room and give a strategic and financial overview. Instead, we got a high-level Tesla long-term view with another train wreck of a conference call. Dan Ives, not holding back, he joins us around the table. Dan, good morning to you.
No, great to be here.
You sound disappointed.
Look, I mean, this was an important call where Musk and the rest of the team needed to step up, adults in the room, give some guidance in terms of what's happening on pricing, the margin pressure strategically. And I'd say train wreck would probably be soft, because this was one where the long-term story is intact, but in the near term, they needed to navigate, communicate. They didn't do that. You'll see a lot of pressure on the stock.
Dreadful assessment. Stock is lower by something like 7% in the pre-market. Have you changed your call on the name?
Look, I mean, we're still bullish, but from a fair
before we go further, my opinion was that conference call was not a train wreck. That was actually a step in the right direction. The last couple conference calls, specifically the last one, if I recall, that was a train wreck. That was one of the worst conference calls I ever listened to. This conference call was definitely a step in the right direction. Was it the greatest conference call I ever heard? No. But there's still some, things that are left a little confusing, like margins and kind of where we're going there. Sure. But I would not call it a train wreck. I've heard plenty of Tesla calls that were train wrecks in the past. This wasn't one.
Perspective. I mean, 350 goes toward probably lower threes, 3 to 315 from a base perspective, because numbers are going to come down. And the biggest issue here is that you didn't give goalposts. Because by not giving goalposts now, the Bears are going to run with it. And look, the Bears won last night. The long-term story is intact in terms of FSD, in terms of if you're a believer in EV, which we are, $1 trillion market cap, I do believe is on the horizon the next few years. But in the near term, I mean, this is one where It's a glass half empty relative to how they talked about it. I mean, this was sort of a 101, not how to do a conference call.
I want to understand what the threshold is for you to say sell, because we have Elon Musk, who just said, as you said, a train wreck of a conference call was not the adult in the room. He wants 25% of Tesla, or else he's going to walk and go develop some sort of robotics company. If he gets 25% of Tesla's shares, do you say sell?
Look, I think, first of all, I view that as sort of impossible here. There's not going to be a dual class situation from a share perspective. Plus, he did sell, he had 22% ownership before buying Twitter. So part of that in terms of there.
I'm up so early in the morning this morning, I just saw a school bus go by. I'd never seen a school bus in my neighborhood in my life. I just saw a school bus in the neighborhood. How'd they even get through the guard gates? What? That was ridiculous.
Board will have some sort of comp package. Right now, it's caught in a legal issue in terms of Delaware. But I think if he gets more voting control, that's something that's going to ruffle feathers. But also the problem here is that the plane's crashing in the near term. And you're talking about salted or unsalted pretzels. And that's the biggest problem relative to what's happening in Tesla is that investors want to have some guidance. Give me some financial parameters, and you didn't get it. And look, and obviously we're huge firm believers, and that's the frustration.
Well, okay, as a firm believer then, what does it do to you that Elon Musk came out and basically said, I don't care if this company makes money. I mean, I'm paraphrasing, but he said, I'm not looking for additional economics, read more money. I just want to be an effective steward of very powerful technology. Does that bother you?
Look, I think in some ways...
She totally misread that. Perfect example of somebody just reading a transcript and not understanding like what was actually said on the conference call. Listen, Elon Musk, the way she framed that is not the way Elon Musk meant that at all. He was talking about he's not trying to get additional shares for the company. He just wants more voting power. So it's not like he's trying to, I want to, get another $30 billion worth of shares or $50 billion or $100 billion or something like that. That's not at all what he's trying to do. That's why he's saying not on the economic front. He's just simply looking for more voting power in regards to the shares. Okay, so, oh my gosh. I mean, the way she makes that sound, it makes it sound like Elon Musk doesn't care about profits or economics. Like, what? No.
Autonomous is going to be super powerful. And I think even what we saw with OpenAI and Altman, I mean, there's definitely a lot of unintended consequences here. I do believe in Dojo, Optimus. I could argue the value going forward from AI is much more than the EV and the actual value today of Tesla. But for Musk right now to kind of exert that, it's agita, it's Harper. It's the last thing as a bull you want to hear, and it does sort of put gasoline on the fire a little, and that's not what you wanted to hear last night. And it goes back to you needed an adult in the room last night, and instead it felt more preschool type conference call.
Isn't this the cost, though, of doing business and investing in a company with someone like Elon Musk at the helm?
Yes and no. I mean, for investors like that, we've seen it for decades, right? And you understand you take the good with the bad. But now, at this point, this was a huge period to sort of walk investors through, give some goalposts. Zach, CFO with him gone, definitely feels a different type of conference call that we're seeing. And as long-term believers in the story, we remain that in terms on the other side. But in the near term, the Bears won, and it's hard to defend. And that's why you're going to see pressure on the stock today, with 2024 being a trough year in terms of margins.
As a long-term believer of Tesla, Elon Musk also said last night that China will pretty much demolish most other car companies in the world. How are you looking at the space overall? He's basically setting Tesla up to be taken over.
Well, I think it's really Tesla and the Chinese EV players, because the price war that's happening, it's a Game of Thrones price war that's happening in Beijing. You're seeing it. I think that was the right strategic move in 2023. 2024, you can't continue to go down that path. At one point, you got to hold serve. And as much as we talk about FSD and everything else, for now, it's about, do you continue to cut prices? We thought 95% were done. We were dead wrong going into that conference call. That was a wrong call. Now it's defending, as a bull in terms of the long-term story.
Listen, I've been listening to Tesla conference calls for probably about 6 years now. 6 years. Tesla conference calls have never been impressive. Ever. 6 years I've been doing this. Their conference calls are usually some of the worst of companies I listen to in terms of getting, good information out of them. It's not that sort of company. It is not the sort of company you're like, wow, this is such a professional, well-run corporate conference call. No, not Tesla. Not Tesla. I could show you many of those companies, but it's not Tesla. So, I don't know, man. Sometimes I think, do people just listen to their first conference call ever? You got to know the vibes before you get in the conference call. Alrighty, next one up here. Mass EV adoption is a lot harder than early adoption. Ooh, okay.
Former Ford Motor Company president and CEO and a CNBC contributor. I guess we had no idea about any potential problems until Tesla said that, Mark. I guess they meant if Tesla says it, then there really is something happening here. I guess that's kind of what we meant there. That was the latest. It's a centipede or a millipede, and that was just another one of the shoes to drop, but it involved Tesla.
By the way, before we go further, if you haven't smashed the like button, please smash the like button. And if you haven't subscribed here, you should. Oh, there it is. There's a like button right there. Make sure you smash the like button. Make sure you're subscribed if you're not already subscribed here to the channel. Appreciate you.
And Joe, when you look at the EV market, you're starting to see the EV market, the growth in the EV market acceleration kind of slow down. And, for lack of a better term, if you look at the last year, the market share of EVs was up about 2.5 points versus the previous year. But in the second half of the year, you saw that growth kind of slow down. So, not to say it's kind of running out of gas, but, you are starting to see now as you go for mass adoption, that's a lot harder than early adoption. And when you see some of the concerns from consumers around, we've talked about in the past around cost and the charging network and repairs and insurance costs, I think one of the bigger things that's emerged for consumers is the residual values because, they performed very poorly, EVs overall in residual values. A lot of that has to do with the price cuts that Tesla took. So if a consumer thinks their vehicle is going to be worth a lot less, overlay that with, a lot of new products coming into the market this year, which will increase the number of EV offerings about 50%. It's shaping up could be a very difficult year selling EVs from a pricing standpoint and a market environment.
Mark, what we've seen is almost a perfect storm. It's one, like I said, it's one shoe to drop after another. And I want to go back to some of the decisions you made at Hertz. Did things really change? And take us back. You decided that Hertz was going to buy a lot of EVs. The news recently that, it sort of shook everyone was that Hertz totally backtracked on half of the purchase that it was going to make because no one wants to rent an EV. Was that a big screw up on your part to order all those EVs or did the dynamics change that much in the last couple of years?
Well, listen, Joe, when we made that decision at Hertz, we saw the EV market growing and we made a bet as a company that said, listen, being a first mover in understanding how to manage EV fleets is going to pay off for us over the long term. And so we were first movers. We've learned a lot. But listen, like any good business that lays out a strategy, when you see the market environment change pretty markedly, you have to make corrections. And in this case, as you heard from the CEO at Hertz, Steve Scheer, we saw demand less than we expected. We saw repair costs higher, but most importantly, the biggest cost in a rental car company, Joe, as you know, is depreciation. And when your main supplier cuts prices 20%, which we haven't seen, in recent automotive history, that hits our income in a really big way. So, the company made adjustments as they should. But the bet is still, I think, the right one because you're going to continue to see EVs over time, slower than everybody expected, become more and more, part of the industry. And, Hertz will be well positioned for that. But, they had to react to the market conditions.
Being a first mover.
From what I heard, there's some people in the private stock group and things like that know Tesla very well and pay attention to every little thing that Tesla's doing and up to and things like that. From what I heard, Hertz did a horrible job of rolling out Tesla in terms of, the experience of like renting an EV. I heard they made it just bad. It was just a bad experience overall. So from my understanding, it's more of a Hertz screw up than like people not wanting EVs, because people clearly want EVs. Like Tesla just came off of a massive record year of selling EVs, and people want to rent Teslas. But if Hertz like screwed it up, like, or, not just that, but then he talks about the depreciation factor there. Yeah, maybe it's a little playing around with the numbers and trying to get some certain things off your books.
Worry that we've got an administration or a government that decided it's going to be the first mover on this. And I think where we are right now, Mark, could be the tip of the iceberg. And there's a lot of things may not stay solvent long enough to wait for that eventual all-in transition to occur. I mean, these emission standards and number of EVs that need to make up the percentage of how many vehicles are on the road, all these things are going to get pushed way back, because you can lead a horse to water, but consumers aren't drinking. They're not drinking. And this could be the beginning of a really ugly period for investors and a lot of other people that just went whole hog with the Biden administration.
Well, Joe, we all know the track record of government kind of picking technologies that consumers are going to want. It's not particularly good. And you rightfully said, listen, they laid out regulations and they went out of their way to say, listen, we're not telling you what technology to use. But they knew very well that with the regulations that they set in terms of fuel economy standards, that electrified vehicles were the only way that the automakers could achieve that. I think, at the end of the day, from a consumer standpoint, Joe, today, as you get to mass adoption, the purchase of an EV is completely discretionary. And so when you lay over some of the concerns that, I mentioned a little earlier, combined with an economy that's somewhat uncertain, from a pricing standpoint, it could be a tough year for selling EVs. It's going to continue to grow, but automakers are going to have to make a choice. Do they potentially cut prices to stimulate demand, or do they live with undercapacity utilization at their plants? Either way, that could hit their margins.
And Mark, real quick, one of the things that Elon Musk said on his call.
One of the big mistakes I think a lot of these traditional traditional automakers are making in regards to getting into the EV market is they're just basically trying to make whatever vehicle they have and make it an EV, right? For instance, I believe I just saw my first Ford Lightning. I don't think I've ever seen a Ford Lightning in person, but I saw one last night. And looking at it, I'm like, it just looks like a normal Ford truck, right? And so it's just an old story of like, let's try to take what we've got and just try to make it the new technology, right? Which is usually not a good thing, because you're not just making an auto, you're making something technology. And one of the worst things you could do as a technology company is just say whatever we got is what we got, and let's just try to put the software in it we needed or something like that, right? Like, you need a fundamental change. For instance, the smartphone industry, the iPhone comes out. It's a fundamental change in the way a phone looks. Like, phones didn't look like the iPhone looked at that particular time. It's a fundamental shift, right? And then other phone manufacturers, they try to make smartphones that looked very different than the iPhone, and they failed. And so we have a story here where, these other automakers are failing massively because they're trying to make EVs look like traditional autos looked, and it's a whole different ball game, right? And so the consumer perception's different. And so, you think about the Model 3, seeing the Model 3 for the first time, I mean, so fundamentally different than anything you've seen in the market. Look at the Model X, so fundamentally different than anything you've seen in the market, right? That's an EV, that's a Tesla. You see the Cybertruck, massively different than anything you see in the market. So I just think Elon's got the right approach. Like, we're doing a whole different product here. We're going to look different than everybody else. I think it's been pretty genius so far, and it's going to continue to be genius.
I think a lot of people were not surprised about, perhaps maybe surprised he said it aloud, is that he believes that some of the Chinese vehicle makers, EV makers, are doing a much better job than the EVs that are coming out of the United States. How much do you think this is a product problem?
Wait, hold your horses for just a moment. Hold your horses, okay? This is not even a big statement. Like, if you did not realize that already, what rock have you been hiding under in regards to this whole situation? Like, it's clear as day. China has the best EV companies in the world. They have not only Tesla, but they have many others, BYD and others, right? They have the best. Like, look at what the United States is putting out for products. It's not compelling at all outside of Tesla. And that's why none of these guys can move their EVs other than Tesla.
About the infrastructure issue in terms of charging stations and the like. But, he's saying, look, it's Tesla and the Chinese companies. And he was saying that without tariffs, actually, that the American automobile makers, their lunch would be eaten if like BYD was able to just, not flood the market, but even sell them at competitive prices.
Well, clearly, Andrew, as you know, from the Chinese EVs, their cost basis is significantly lower than Western companies. Now, part of that was probably driven by government incentives because, the Chinese government 15 years ago said, hey, listen, we missed out on being a leader in ICE engines.
He's talking strictly about prices. I think he's talking about the quality of the vehicles, the feature set, just how good they are.
Yep. That's what he's talking about.
Well, listen, they have absolutely upped their game on quality versus where they were 10, 15 years ago. It's a different level of quality, probably matching the Western automakers. I think the other thing, when you think about the product content there, listen, Chinese consumers, they really go from a digital first perspective. So in their vehicles, they want the latest electronics. They want the latest, digitally enabled features linked to their phones, et cetera. The U.S. consumers are somewhat different. But your point being, and Musk's point yesterday, is, listen, they have a big competitive advantage. And, I think one of the advantages that Tesla has versus maybe some of the other Western automakers is they're competing with the Chinese on their home market. And when you're competing at the coalface with one of your toughest competitors, you become better overall, not only in that market, but around the world. So I think this is going to play out really interestingly, from a political standpoint, from a tariff standpoint here in the U.S. But it's very clear the Chinese have upped their game in a very big way with EVs.
Yeah, and oh man, it's just so funny. It's just so funny. Yeah, and do I believe Elon Musk is probably right about that? Yeah, I think he is probably right. I think if the Chinese companies could come here, I think they would probably crush competition. So, and it is very possible that some of those Chinese companies could manufacture vehicles in the United States over time. We'll see where all that shakes out at, but yeah. All right, next one up here. In one earnings call, Tesla removed itself from the Mag 7, Kramer says. Okay.
Straight. After today's 25-point drubbing, Tesla is out of the Magnificent Seven. Done. Stick a fork in it. We all know it. People are just afraid to say it. Maybe they worry Elon Musk has something up his sleeve, or maybe they're just scared of the guy, or they just like saying Magnificent Seven all the time, although I bet most of the people have never even seen any of the three cinematic iterations. I do not have such trepidation, people. That's because in one earnings report and conference call, Tesla removed itself from this elite group by itself. I think it's a teachable moment about what qualifies a stock to be a member of the Magnificent Seven, which sadly is no more. Let's start with the need for growth. You have to have it. You got to have it to be magnificent. But what did Tesla say last night in its outlook? Quote, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023, end quote. You can't stay magnificent with a notably lower growth rate. That's like bringing a knife to a gunfight. And if you remember, the guy with the knife doesn't make it to the end of the movie. Second, a big reason why we adore the Seven is that they have very little cyclicality. We don't want to hear about interest rates or stretched consumers or incentives and tougher monthly payments. But we heard Elon Musk talking about affordability, for heaven's sake. Listen to this, quote, we have lots of people who want to buy our car but simply cannot afford it, end quote. You're never going to hear that from any of the other Magnificent Seven.
So before we go further here, okay, it's important to understand that before the Magnificent Seven, CNBC used to have another name for a group of stocks. It was something like Manga or something like that. Before that, it was another name that now it's escaping me right now, but it was another name of a group of stocks. But then they took Netflix out of it, so then it wasn't Netflix anymore, and that got taken out. And then Netflix stocks has actually performed tremendous over the past year and a half. Then they took Meta out for a while, and then now everybody wants to own Meta stocks. So that's in the Magnificent Six, I guess we can call it now. So it's just funny, they'll take these stocks out, but just because they take them out of whatever their little sayings are for the moment, it doesn't mean they're gone for good. And it doesn't mean those stocks are going to perform bad, because actually they could perform tremendous in the future, as Meta did when it got taken out, as Netflix did when it got taken out. So something to keep in mind.
Hostage to the broader economy like Tesla. In the old days, I always loved that Tesla didn't have to advertise. However, Musk now talks about digital campaigns, audience education. Sounds like selling cars to me. Third is leadership. No matter what, I always feel that the people running their respective companies are committed to the enterprise and committed to you, the shareholders. They are all in. Musk, though, actually makes it clear that he's unhappy with the status within Tesla, and he might not take the company to the next level unless he has more control. He says he sees, quote, a path to creating an artificial intelligence robotics juggernaut of truly immense capability and power, end quote. But then Musk goes on to suggest that he has, quote, so little influence over the company at that stage that I could sort of be voted out by some sort of random shareholder advisory firm, end quote. He wants more voting power, maybe almost double the amount he already has, getting him 25%, possibly via a dual class of stock, too. Oh, and how about this reassurance he offers if he gets more stock, say up to 25%. And again, I'm quoting, that's not so much that I can control the company, even if I go bonkers, end quote. Oh, thank heavens. You don't have a Magnificent Seven CEO who might go bonkers. And more important, what if he doesn't get his 25% vote?
Why'd you ever put him in the Magnificent Seven in the first place? Oh, because the stock was doing good for a while there? Like seriously, this is the same Elon Musk we've known for years. Actually, it might be a more tame version. The same man that said 420, taking the company private in the middle of a trading day. Same man that said a lot of crazy things, and now all of a sudden, what? He's worried about if he goes bonkers. That's a typical, thing that Elon Musk would say. Come on, man. It just cracks me up. Do people just wake up and listen to their first conference call for Tesla?
Does he take his bat and his ball, along with his artificial intelligence and robotics juggernaut, and go home? You think that Yul Brynner or Steve McQueen would just stop championing the villagers and go to another gunfight if they didn't get more compensation? The guy's already the world's richest man. Stick around, pal. Get the job done. Finally, none of the seven...
Once again, it has nothing to do with him getting more shares in terms of, a bigger ownership stake. It's about voting power.
Been at the mercy of foreign competitors. But now Musk concedes that Tesla's facing dangerous competition from the Chinese. Quote, frankly, he ponders, I think if there are not trade barriers established, they will pretty much demolish most other car companies in the world, end quote. Musk does say that there could be a second wave of growth, maybe in 2025 with new products. He does have a terrific robotics element. And as he says, quote, if we execute very well, I think Tesla could be the most valuable company in the world, end quote. Sure, terrific. But a dozen other companies can say the same thing. I want the ones that can do it, not talk about it. Right now, the world's richest man is all hat, no cattle. As someone who is among the first to vocalize the Magnificent Seven rubric, I officially acknowledge now that there are only 6 left. A super six-pack. As for Tesla, time to move on. I like to say there's always a bull market somewhere.
Oh boy, so now they're switching it to Super 6. Oh my gosh. Well, that's until one of the other stocks does bad. Maybe it's Apple next. Maybe Apple's going to get thrown out. I don't know. We'll see. We'll see. Somebody's going to get thrown out next, and then it's going to be down to 5. And then they're going to have to bring back in Netflix. Maybe they'll just swap out Tesla and bring back in Netflix like they used to have back in the day when it used to be. What was that term it used to be? Somebody remind me in the comment section. What was the term before Magnificent Seven, before manga or whatever it was? What was the old term? Alrighty, guys. Appreciate you joining me. Thanks so much. As always, much love. Thanks for being subscribed to the channel. If you're looking to join my Patreon, pin comment down there. Join us in there and the Discord chat. Plus, get to see the moves I made here today and in future weeks. Much love and have a great day.